I'm Edwin Warfield. I'm the publisher of Citybiz, and I'm honored today to interview Mikhail, who is the CEO and founder of Stratton Equities. Welcome, Michael.
Thank you.
Stratton Equities was founded in 2017. Can you tell us about the launch and your vision for the company?
Sure. I've been in the mortgage industry for since 2003. I bought my first house at 19, so I've always been in the mortgage and investment world. And I just saw that I worked for multiple companies. I ran some companies, and I saw that they weren't, in my opinion, running to their full potential. Whether it's the way the training was, the way the programs that they had, the quality control. There's a lot of things that could have been done significantly differently and better in the private lending, non-QM, bridge loan mortgage world. And that's what we did. It took me about 6 months to come up with the concept and the basic foundation of the company. Then when we launched, it took about, from 6 months from there, things did very well. We went straight up, and now we're actually at a very large expansion. Literally, as we speak, we're expanding our office space, doing a lot of new hiring, and going to the next level.
And so, what are some of the milestones of the last couple of years since you launched the company?
Well, the biggest milestone is we brought in a great new president, Harvard MBA and PhD, that does great training with our salespeople. We're very big in training our loan officers. That's something that I saw in the industry, that, not to talk badly about the industry, but they don't do a lot of hands-on continuous training, and to have everything uniform. A lot of times in the mortgage world, everybody kind of has their own style, their own technique, and that doesn't really work for the plan that we had in place. So putting in very extensive training for our loan officers, our sales team, our processing, our closers, our background team, so everybody has pretty much, it's very uniform. That's been a huge milestone for us. And of course, our revenue. Ever since conception, Stratton Equities' revenue has been doing well, about 20% growth, 15-20% growth every quarter. Obviously, we took a dip like everybody else did during COVID, and now we're coming back much stronger.
Can you describe what hard money lenders do?
Well, hard money is a slang, and actually I wrote the article, which is hard money for fix and flip. So drives us all crazy in the office, and I've trained all our sales team to understand kind of what it is. Hard money is just it's a slang that's being used of pretty much a non-qualified mortgage, right? It's called a non-QM loan. So people will call us all the time and go, I want a hard money loan, but I want a 30-year fix and I have an 800 credit score. Well, then you don't do a hard money loan. Obviously, we have that situation. When I bought my first house at 19, I used a real hard money loan, and the interest rates were 24%. It's a bridge loan, literally 24%. It's a bridge loan. And because like a real hard money loan doesn't really verify much with the borrower, right? They don't care much about your credit score, your background. A hard money loan, a true hard money loan, is an asset-based loan. So property's worth X, we're giving you X against collateral of the property, and it's always going to be in a 12 to 24-month bridge loan. It's never going to be a 30-year. So if you have a 30-year loan, it's not a hard money loan. Fix and flip, again, it's not a hard money loan. Most fix and flip loans go through a decent amount of underwriting and processing on the borrower. So it's not a hard money loan, it's a fix and flip loan. And if you look at the rates, right, a real hard money, they're double-digit interest rates. That's a hard money loan. So with institutionalized lending in the past 10 years of the private sector of private lending, rates have significantly dropped, but underwriting has significantly gone up. So like our fix and flip bridge loans, pre-COVID, we got down as low as 699. That's astronomical of how low that is, right? A real hard money loan that is not going to do a lot of verification, a lot of underwriting, you're easily going to be 10, 12, 13, 14, 15%, give or take. So we are technically not a hard money lender because of where our rates are. I mean, we have rates that go down to the fours, obviously on a term loan. So we're technically not a hard money lender. But we're more of a private money and a non-QM lender. But unfortunately, everybody just knows the term hard money, so it's just thrown around.
And so what are the primary advantages?
Well, there's a lot of advantages. I'll give you a great example. A friend of mine, one of my cigar friends, called me yesterday. He was down the shore with his son, and they were looking at investment properties. He called up the largest, most advertised mortgage lender in the country. They were, for an investment property, they were giving him a maximum of 70% financing, and the underwriting, he couldn't even get approved because the underwriting is not conducive for somebody buying an investment property. our programs are made for investors. It makes it much easier for investors to get approved and get qualified to continually buy a whole portfolio of investment properties. Where our loan will go to 80% or higher, the largest lender in the country, because it's called a QM loan, right? So a QM loan is a qualified mortgage. That's your everyday mortgage that people know. It's a QM loan. You go to the biggest bank in America, you go to the biggest mortgage lenders in America, they do QM loans. Ton of regulation, ton of underwriting. They want to know what you did 20 years ago to get you qualified, and it doesn't really work. Everybody knows if you've gone through it, it doesn't work for a investor that needs money fast, needs to close fast, doesn't have maybe all their ducks in order, that moves money around. You can't go to a bank or QM going to move money around. They want the money there and seasoned. And I mean, if you move $1 around, they want to know why and who and what and where and how. So with us, we don't have those kind of issues. So we make it very much easier for real estate investors to secure financing.
And so what types of real estate investors are you focused on?
Well, we do a lot of fix and flip, of course. That's a big thing. So people are buying and rehabbing property. We do a lot of fix and flip loans. Our biggest program is actually our no-doc, 30-year term or a 5-1 ARM or a 7-1 ARM no-doc. We don't really look at job history. We don't look at income of the borrower. None of our loan programs look at tax returns, not one of them, even our fix and flips or our term loans. So we actually do more term programs, which is like amortized over 30 years, than we do bridge loans. That's our biggest program right now. A big part of it is because our rates are phenomenal. They go down to the 4s on an 80 LTV term loan. That's a It's a great program right now.
And so let's talk about your different programs. What are the different types of investments that are appropriate for Stratton Equities?
So we don't do anything, we've gotten requests for $1 billion to build a casino in Las Vegas. Obviously that we don't do. We like to be between $100,000 and $5 million. That's kind of our sweet spot. Bridge loans, whether it's just a straight bridge loan, fix and flip, cash out, rate and term loans. But really, if you want to break it down, it's 2 loans. It's a bridge loan that can be used multiple ways, either a straight bridge or a fix and flip or a rehab loan, or it's going to be a term loan. A term loan can be used 3 ways: purchase, cash out, and then a refi, just rate and term refi. But then the different programs, people don't understand is it's based on the underwriting, right? You go anywhere else, they don't like seasonal rentals. They want you to have a long-term lease or you're not going to get financed. We do seasonal rentals. We do a lot of Airbnb properties all over the country. It is the programs that are much easier and a lot looser for people to secure financing, right? It's not just, okay, it's a 30-year mortgage or it's a bridge loan, fine. You can call it whatever you want, but does the underwriting allow for multiple different scenarios for people to get financed? Because obviously everybody's different in their scenario. Is it flexible enough for more people to secure financing? And the answer with us is yes.
And so how are you growing Stratton Equities? What's your vision for your growth?
Well, I don't want to give too much away, of course, but training was huge. Our back, everything's in-house. I don't outsource anything. So our underwriting, our processing, our closers, our sales team, everything we do is in-house. Everybody gets trained. We don't bring anybody from the outside to run a team. So our managers and our sales managers grow from within the team. They start off as a loan officer, then they grow their way up and they learn more. Everything is done, in-house to us. And it's really our big expansion was supposed to literally be March of last year. Exactly when COVID hit, virtually the week, is when we were getting a new office space. Thank God I didn't sign that lease. Getting a new office space, hiring significant amount of salespeople, and that was our big expansion. Then, of course, COVID hit. We put things on hold, and we've been coming back ever since. We're doing a large hire this March. So next month, we're doing a hire about 15 people. Then even more people, and probably 15 more in probably summer. So to get to a sales team of 30 full-time loan officers plus back-end staff is where we're going.
Are there any additional thoughts that you want to share with us?
Well, I really do want to get the message out there about the financing that we do, because few people know it exists. I talk to people all day in the mortgage industry, in the regular world, and they have no idea that no-doc loans and all these things still exist. Realtors come to us all the time, and then they're shocked when they find out that their clients only tax returns and whatnot. So obviously we make it much easier for real estate, for realtors to secure financing for their clients, which obviously makes the realtor more money because they can fit more people into properties. So right now, a big thing is my mission for the next however long, is to go mainstream and to get the programs that we offer out there. More the programs than just the company itself, right? The company's, it can be great. We wouldn't be the company we are if it wasn't for the programs that we offer. We would just be like everybody else. So I want to get the message out there that these programs do exist and people can take advantage of them.
Well, thank you for sharing your thoughts and your vision, and it was exciting to learn about your company.
I really appreciate your time today.